Hello, today is Friday. It is May 6th, 2022. Gotta think what month it is, mercy. We're having a lot of volatility. It does provide some opportunity. One thing, as you know, that I have not done well at in previous years is buying dips at key levels. Preventing dips has really not been the issue. And so we're going to go over the performance real quick and we'll show you a few charts and we'll send you off on your weekend. So let me shift gears. Number one, if you think that this environment is easy, it is not. In the past week, this is what we've seen from the S&P 500. 429, worst day of the year. 4.5, best day in 2 years. 5.5, which was Thursday, yesterday. Second worst day of the year. We opened red pretty strong today, which is exactly what I wanted to see, provided a little opportunity. It's not pretty. We ended up positive on the day, but let's take a look at some of the charts and we'll go from there. Okay, so for the week, it really wasn't that bad, but it feels bad because we're kind of staying in that same level, and I'll show you charts. But 1 week, intraday, 1 month, you can see it's not pretty. Year to date, not pretty. But again, the average intra-year decline for the S&P 500 is right around 14%, midterm year around 20%. So this is very common. We're just not used to seeing it. Psychology plays a huge part in this. In reality, you have years like 2021 where we couldn't even see a 5% dip. And so everybody thinks they're just going to be able to buy whatever they want and be able to hold. And it doesn't work that way. Very few people understand that despite what the industry tells them. But let's hit the charts and we will go from there. Okay, 3 minutes starts now. I want to show you the core 10 year to date. The core 10, these are the 10 core positions in the S&P 500. There's 500 companies, but these 10 companies make up 25-ish% of the index. So if these are not doing well, it's going to impact the performance. And as you can see, Berkshire Hathaway is the only one that's actually green year to date. That should be telling is you got to be careful. And if you're going to participate, take gains quick. 1 week, not really that great. 1 month, horrendous. But you can see that there's going to be some opportunity, which is why I need to take some shots. So there's the core 10. So what does that tell me? Still have to be cautious. If you get a gain, a big gain, probably wise to take some off. Here is my performance on the week. As you can see, we started this new strategy in September 3rd, 2021. S&P 500 since then is down 10.4%. We are down 3.84%. The thought process is the index is difficult to beat, and if it averages 10.5% since 1956, if we stay near there, prevent some of the dip, we should be in good shape. And so far, we had a positive week. We're up 1.99%. The index was down a little bit. And overall, we are beating the index. We beat the index by 2.08% for a total of 6.55% since that time. So overall, not bad. Let's go to the charts real quick. I'm going to move this screen. If I can do it, maybe not. Okay, I'm not able to do that. Short term, it's kind of a mess. We're right in this triangle trying to get out. You can't be biased in this market. If you're saying I'm bullish, that's great, but if it goes below a key level, get the heck out. That's the environment we're in. The big thing that I'm watching here is, number one, sellers are still in control. It doesn't mean I can't make money in this environment, but you have to be careful. We got some good entries last week. We got in, it doesn't really matter the levels, but I made sure this week that as we got close to there, I was going to take gains, and that worked out very well. On this day, which would have been the Fed day, I sold at 43.01, which was a really good sell. We still have this big gap up here that I hope gets tested, and I'm hoping I got some entries on Friday today at 41.05 and 41.34, so it wasn't perfect, but we did have a green day, which is good. Overall, I would love to see 40.25. It would scare people, but I am open to the fact that this could be close to a double bottom similar to here and really have an objective move. We are below a 5-day moving average, the orange line here, which that determines short-term trend. So short-term trend down, midterm trend down, long-term trend is up. It's going to be like that for a long time. But some things that are concerning, just to be real, is the 50-day moving average is turning down and is still below the 200-day moving average. So these are not good things. We almost had a cross of the 5 and 10-day. We're working on this. I'm hoping this is a base, and we kind of scared the majority out. Overall, it was good that we opened red today. We're really not seeing huge buying come in. I have to be real about that, but I think there could be opportunity ahead. So we're going to end it there. Overall, the summary is this. There are opportunities. We're still beating the index. This year very well could be a setup year for next year. So if we survive this year and get good entries, that is huge. The thing that is very tricky is, this is over a 3% up day, this big green candle here, and it's well above the 5-day moving average. I decided to sell some because every time we've done that, we've sold off the next day, and that worked out very, very well. But one of these times, it's going to go here and just continue like it did here. Got above and continued. So we have to be open to that. I have to take shots. That's where I have to improve, and we're actually doing better at that, which is why we're outperforming. Protection-wise, has never been a problem. We've prevented half the dip every time since a long, long time ago. So where I need to improve is things like I did today. It wasn't fun adding today, but we did have a green day and we'll take it. Sold off a little bit after hours, but I think we're going to be okay. I would rather see a red open on Monday. Have a great weekend. I think we're going to be okay, and you should be thrilled that we had a green week in a very, very difficult tape. One final thing to kind of keep you aware as to my thought process. Why market timing and sidestepping bear markets matter. I'm not trying to time anything. I'm trying to go in at key risk reward levels. If it goes below level, I got to get out. And that very well could happen Monday because I am pressing pretty decently hard as of today. Most great traders and investors do not ride it out in bear markets, meaning I'm not going to hold long and get killed. That to me is not a strategy. They raise cash, they avoid most of the deluge, and fight to live another day. Don't listen to traditional old wall language. It will come back. And the proof of this is this fascinating chart. What you constantly hear is buy and hold, buy and hold. You can do that with good companies and you will be fine, not denying that. But when advisors tell you it's missing the 10 best days is what kills you, here's the red, missing the 10 best days. And here is the S&P 500, just buying and holding. And here is missing the 10 worst days. What does this mean? This means to me, protection is everything. Trying to prevent the dips, and when we go below key levels, just protect a little bit and get back in soon. Nobody's going to be able to time this perfectly, but if you continue to protect on the downside and quit, you cannot have a bias. That's the hardest part about this is I'm long one day and out the next. You know what I mean? So it's very, very difficult, but it's very clear that since I've been doing this, we've been up 10%, 6% on a continuous basis for quite some time. So overall, the strategy is working. I just wanted to show this to you because a lot of traditional advisors get away with not doing anything when in reality, this is the truth. This is the reality of why I tried to protect on downside. That's never been the issue for us. The issue is trying to buy at key levels and ignoring everybody when I should be buying. That's truthfully the issue. And I didn't want to buy today, but there were opportunities that I paid off. And so we're getting better at that. So progress. Have a great weekend, guys. Thanks again. Thanks for your trust. Bye.